Hello, hello. Thanks for joining us. Thanks for joining us a couple of minutes early. If you, if all of you could hear me, please give me a thumbs up or an emoji in the chat room or raise your hand. Elvin, Emily, Trinetta, Lula, and the rest of you can, if you guys can hear me. Thank you. Got one thumbs up. Do you guys see the first slide that says first time home buyers class on your screen? Yes, okay. Thank you, Lula. Appreciate that. Thank you. So we're gonna give it a couple of minutes. Usually, we will have some participants that will be joining a couple of minutes after the start time, so we give them some time to join us. Appreciate those that join us early and on time. This webinar should take about maybe an hour and a half, depending on how many questions we have. Feel free to, if you need to step away early, feel free to do that, and then we'll catch up later. But it's based on previous experiences or the previous presentations. It will last about an hour to hour and a half. So I am in Vacaville. How many of you are in Solano County here? How many of you are in Contra Costa County? All right, so we got at least a couple of people in Contra Costa. The slideshow won't be provided, or I might be able to provide that. I'm gonna find out if I can email it. Someone just asked me to send the recording over, the recorded webinar over as well. So I need to find a way or see if I could find a way to send the recorded webinar over as well as the copy of the presentation. I might not be able to get that done tonight, but we'll definitely do it so by no later than Friday. I just need to find out from a technical standpoint how to get that over. All right, we'll give it about a minute or so. Again, thanks for those people that um, joined in early. I just received a text message from one of the participants saying that the link is not valid. So give me 1 second here. Let me take care of this real quick. I'm gonna send this link real quick. All right, all right. So we get started. Got a good number of participants. So thanks again for those that joined. My name is Jim Lin. I am a real estate agent as well as a mortgage loan officer. And today's presentation just could be webinar will be a little bit different than what I've been used to doing. This is based on feedback from previous sessions. So today and probably moving forward, I'm going to go over the step-by-step process of buying home, starting with where you are right now, most likely renting, to all the way to the closing of your loan. So I'm going to go through that entire step with all of you during this webinar. It's going to be very comprehensive and there will be a lot of information. So feel free to ask them any questions. There will be four Q&As with one big one at the end of the presentation. For those that have questions, please wait till we get to the Q&A. So that ensures me won't be missing any of your questions. And also going to post the consultation or the appointment link in the chat room. So for those that want to book an appointment with me, your one-on-one 30-minute consultation to go over your personal situation or answer any questions that I did not answer or address during the webinar, feel free to do that as well. So, so give me 1 second. For those that just joined, this is I'm going to post the link to book the consultation with me. So all right, so first-time home buyers. I've been there as well. I bought my first home about 21 years ago, I believe, either in 2002 or 2003. A couple years after I graduated from college, my parents just said, "Hey, Jim, we don't want you to live with us anymore. So here's some money. Go buy a home." So that's what I did. My first home was in Lathrop, and that's in King County, uh, where right by Tracy and where Stockton is. So that's the first home that I bought. I didn't know what I was doing, but I remember feeling very stressed out or very concerned. Um, so I know what you guys are going through. I've been there, and most of my clients that I work with are first-time home buyers. And this presentation is geared towards uh, first-time home buyers. So a quick little agenda. So we're going to go through a quick introduction, and then we're going to go through the home purchasing process, and this will be the bulk of the presentation. And like I said earlier, there will be some Q&As. So again, please hold your questions till we get to the Q&As. And then lastly, what to do after the presentation. All right, so let's get started. A quick introduction about who I am and the first decided offer. Again, I am a mortgage loan officer and a real estate agent. I have been in the loan business for a little bit over 11 years. Um, became a real estate agent about a little bit over a year ago. And again, I primarily work with first-time home buyers such as yourself. If it makes sense, what I'll do is I can represent you in both capacities as a loan officer and also as a real estate agent on the same transaction. Sometimes there might be a conflict of interest, or sometimes it might be better for me to handle one or the other. So during our initial consultation, I'll have a better idea of which way to go. So if I feel that I need to refer you to one of my preferred lenders, I'll do that as well, or refer you to another real estate agent, and I'll do that as well. All right. So so that's about me. Now, step one. So get to the bulk of the presentation. So step one in the home buying process is plan your money. What I mean by that is that you need to know where your money goes. So a couple of things we look at. One, we look at your monthly budget. Now, you should know what your monthly payment looks like. And two, what are some of the upfront costs into when you're purchasing a home. And I'll go over each of these items listed under upfront later on in the presentation. So in terms of budget, we look at your total monthly payment, which includes principal, interest, taxes, insurance, and any association dues. In our industry, we call that PITIA. So principal, interest, taxes, insurance, and any applicable association dues. So that will be your total monthly budget or your total monthly payment. Your taxes and insurance could be prepaid on a monthly basis, or it could be paid when they're due. For taxes, those are due twice a year, February and November. Your insurance are up to you. So you could either pay your insurance company once a year, or split them into quarterly or monthly payments. But we still have to figure them out or have a breakdown of what those are on a monthly basis. So you have a true idea what your monthly payment and what your budget should be. At the same time, your budget needs to be flexible and realistic. I have worked with a lot of clients that they're paying, let's say, $2,000 on their rent right now, and they want to buy a $500,000 home with minimal down, and they want to have the same payment as they're currently renting, which is $2,000. But unfortunately, that is not realistic. Like just the taxes and association on a $500,000 home is almost half of their $2,000 monthly budget. So that's not realistic. So, but you still want to have a set a budget. Say, hey, this is what I feel comfortable with. Give yourself and also your real estate agent a framework. But at the same time, you want to be realistic and make changes. Going into your home before you go to start your home buying process, the proper expectation is that your total mortgage payment, again including taxes, insurance, and any association dues, will be higher than your current rent. So that is important. The last thing that we want you to experience, and some of you will, is what we call payment shock. Right? So if you're only paying $2,000 a month in rent, which is a lot, and your total mortgage payment moving forward will be $4,000. Guess what? That's 50% more than what you're currently paying and have been paying. So that might be a shock to you guys. Right? So some of the upfront cost. The most common one is what we call earnest money deposit. It's commonly referred to as EMD. What that is a good faith deposit held by the title company. The title company, almost 100% of the time, is chosen by the sellers. It is negotiable, but it's typically 3% of the purchase price. And then at close of escrow will be credit towards down payment. So what that means, if you are doing an FHA loan and you're putting and your total down payment is 3.5%, but since you already put down 3% in a form of a earnest money deposit upfront, then at closing, you're only responsible for the remaining 0.5%, and then plus any closing costs. Now, your earnest money deposit or EMD is what could be at risk if all the contingencies are removed and you do not move forward with the loan, or you do not qualify for the loan. So the only way to protect yourself against possible monetary loss is you must have contingencies in place. And I'll go through what those are and how your real estate agent can help you with this to make sure you don't there's no monetary loss. The next item is down payment, and this varies according to the type of loan. So for conventional, and also credit as well. So for conventional, usually 3% to 5% down, and most lenders will require 680, minimum 680. FHA minimum is 3.5% down. Most lenders will require a minimum of 620. Some will require 640. However, there are a handful of lenders out there that will require 580 or even less. So for VAs, potentially you could go with 0% down, and the credit score requirements are very similar to that of the FHA. Again, 620, 640, or even 580. One of my clients recently closed on a VA loan here in Vacaville, and we went with a lender that could do 0% down with credit score as low as 500. So again, down payment varies according to a lender, the type of program, and your credit scores. And it is expressed as a percentage of your purchase price. All right, so closing costs. And I will have a sample of what a closing cost, a loan estimate would look like. For now, let's focus on the different components. So typically, there are four components that make up the closing costs. You have lender, title and escrow, city and county, and prepays. Now, the prepays, those are not closing costs. Those are certain items that you have to prepaid at close of escrow, such as your homeowner's insurance. Those are your expenses. But since they are due at close of escrow, we typically lump them as part of the closing costs. Now, out of all these four components, there's only one component that is lender specific, right? So when you're shopping around, the only component that you should be comparing is the lender cost. The reason I say that is because the lender doesn't have any control over charges by third parties, such as the title and escrow, again, which is usually selected by the seller. City and county transfer taxes. So each time there's a change of ownership, it's a taxable event. And then prepays, like I said earlier, one of the examples is homeowners insurance. You can use any insurance company you want, and therefore the lender do not have control over that or any of these other third parties. So again, when you're shopping around and comparing costs, the only component that you should be comparing will be what each lender charges. Now, your appraisal report and also your credit report fees may be collected upfront. A majority of the lenders will collect your credit report and your appraisal fee upfront as soon as you're in contract and ready to submit the file into underwriting. Right? So, and it's typically about 2 to 4% of the purchase price. And again, I'll go through, I'll share with you guys a loan estimate of a recent transaction that I had, give you an idea of what the closing costs look like. And then mentioned contingencies earlier on. One of the contingencies is what we call inspection. Typically, in Solano County, the typical inspections are your home, roof, and pest. You might want to do what we call sewer lateral, depending on how old the house is. Typically, for your home, pest, and roof, is I would say about $1,000 or so. Now, for those that are in Contra Costa County, the sewer lateral is a mandatory requirement. And make sure there's no blockage, make sure that any water, the water flow will flow accordingly. Typically, the seller will in Contra Costa County, the seller will once before or during the time that they list the house, they will get an inspection done, and they will let the agents know if the sewer lateral is compliant or not, and if not, who will be responsible for it. Could be the sellers, could be the buyers, or could be split 50-50. So in Contra Costa County, it is a requirement. In Solano County, I would recommend it depending on the age of the home. So these are some of the upfront costs. All right, so any questions so far? I'm just going to take advantage of this, take this opportunity to answer any questions. Questions, anyone? I'm going to post my link for the consultation here again. So again, if you guys have any questions, I want to discuss your situation in private, feel free to book the link. or book an appointment, we're using that link. For now, any questions? You guys still with me? Did I put any of you or all of you to sleep? Give me a thumbs up or emoji if you guys are still with me. Yes, thank you. Yes, thank you, thank you. At least um, you guys are still with me. Thank you. So it doesn't seem like we have any questions at the moment. So I'm gonna go right next to hey Alvin. So next to the next presentation. Um, thank you. So all right. So step two, mortgage financing consultation. Now that once you have a budget in mind and have an idea what some of your upfront costs would look like, the next step in the process is to talk to a lender. Again, and this is where I come in. I would love the opportunity to uh, go over your situation with you. Like I said, if I think it makes sense for me to handle your financing needs as well, I'll do that. Otherwise, I can refer you to one of the preferred lenders that I work with. All right. So why is it important? Why is it important to talk to a lender first? First thing first, you want to make sure that you qualify for a loan. Right? Believe it or not, there are a lot of times where uh, prospective buyers will start looking at houses, do the research online on Zillow, or even go check out open houses, or um, go look at houses from an agent, such as myself, without even talking to the lender first. They think that they qualify, or but for the reason they would rather look at houses first. And there'll be times where, and I have experienced this personally as a real estate agent. I have worked with a couple of clients last year where we were looking at houses. They actually had one of them actually had a approval letter from my online lender, which I won't name. Um, so by the time we were ready to make an offer, I asked for a copy of the pre-approval letter and then bank statements. Given my lending background, as soon as I reviewed those documents, I could tell that they don't qualify just from an asset standpoint. They didn't have any down payment. And, so I'm not sure how the other lender gave them a pre-approval. So obviously my clients were very disappointed. Um, we missed out on the house that they want to make an offer on. So what I did was I referred them to one of my preferred lenders that offer a down payment assistance program. So they're working on that as well. I also work with some clients that didn't talk to any lender. We look at several homes, and once they're ready to make an offer, they decided to work with me as their lender as well. But unfortunately, they didn't qualify, and it wasn't anything I could do. So my point is always talk to a lender first. Make sure you qualify for a loan. Right? By just having that conversation with a lender, not only will you know if you qualify, now you will know what your max purchase price and loan amount is. Right? And ideally, that's what you should be doing is looking at houses that are within your pre-approval limit. And trust me, I have clients that even though they know what their max purchase price and loan amounts are, they still want to look at houses that are above their qualifications, um, which makes it tough as a real estate agent. Um, but I have to set the right expectations. But and then lastly, you want to know what your monthly payment are, right? Um, you don't want to have a house or don't know what your payments are, and then once you get the pre-approval letter, talk to a lender that you're in shock that hey, the payments over your budget. Um, yes, yes. For me, there are a lot of realtors that would prefer clients that are already pre-approved before showing them houses, and that totally makes sense. Um, for me, I don't mind it as well. I don't mind it just because from my lending background, I'll ask them during the time that we're looking at houses, kind of see do a mental or some see if they qualify or not. But I agree with you. Um, it is a waste of time. But at the same time, it's a good learning experience for my clients that hey, at least they know what's out there, and then they know they know they can qualify. They'll qualify, not then go back to the drawing board. But it depends. The practice varies. Okay, and then um, speaking of, who should you talk to, right? So mortgage broker. Myself, I am with Nexum Mortgage, which is a independent mortgage company. Um, the advantage of working with mortgage brokers such as myself is that they have a lot of products, pretty much any product they could think of. Down payment assistance program, investment loans, no income documentation. Um, your local bank or credit union, Wells Fargo, Chase, whoever you bank with, and that's a good source. And then lastly, online lenders like your Rocket Mortgage, Loan I consider them an online lender. So those are some of your possible sources of lenders that you should or you could work with. Okay, so the pre-approval process nowadays is all done online. It takes about 20 to 30 minutes. Basically captures your name, your social security number, your date of birth, and then your employment information and income and assets. Once the application is submitted, then you will get a automated email with a link to a secure portal, online portal, where you can upload some of the requested documents, such as your pay stubs, bank statements, uh, most recent 2 years W-2s. Keep in mind when it comes to bank statements or asset statements, we want all pages, including the blank ones. So some and so this list will be enough to get us started. And then most importantly, be upfront and volunteer information once your lender contacts you to go over the application. Because obviously we don't know what we don't know. So if you have any financial changes, let's say you are in a process switching jobs, right? Let your lender know, let me know. If you are gonna buy a car with minimum down, guess what? That's gonna impact your qualifications. And we wouldn't know that unless you tell us. So please share your information with us and be upfront. Even though that you might have bought a car maybe a month ago prior to submitting your online application, guess what? That loan, the auto loan might not be on the credit report. Sometimes it does take about 1 to 2 statement cycles before new credit accounts are reported. So please, when your lender calls you to go over your application, be upfront and volunteer info. So that way we make sure that you qualify or make sure that we're qualifying you correctly. The last thing we want to do is have you go in a contract and then find out that and you have a new car and the monthly payment is too high, and that will have an impact on your qualifications. Okay, and then how do you decide on which lender to work with? A lot of people look at rate and cost, and I agree that's very important. Obviously, you want to have the lowest cost because that would determine what your monthly payments will look like. But they're not. Well, they shouldn't be the only factor. I know as a real estate agent, I want the loan officer that I'm working with, either from the seller side or the buyer side, to be available after business hours and on weekends. The last thing you want to do is work with a lender that's not local. I have worked with clients which lender is, I believe, was in South Carolina, and that person only works from 9 to 5 local time. So, and that person only returns emails once a day early in the morning. Any subsequent follow-up emails, I had to wait till the next business day. So, which made it very difficult for me to get updates and for me to provide updates to the listing agent. So there are factors. It should be hopefully the lender that you work will be local and available after business hours and weekends. You want to look at the online reviews, right? And then experience. Talk to them, ask them how long have they been in the industry. You also ask your friends, colleagues, or coworkers for referrals. Or you could Google, simply Google, say, hey, mortgage brokers or mortgage loan officers in Vacaville or in Contra Costa County, Solano County, and then read the reviews, call them, talk to them. And credit report. Like I said earlier, some new accounts might take about a month to 2 months to show up on your credit report. So again, please be upfront with us and volunteer information. And most of them are valid for 90 to 120 days, depending on the lender and depending on the loan program. So if you think that you will be able to buy a home or your time frame is within 90 to 120 days, then you should get the pre-approval done. Um, Otherwise, wait a little bit. Now, if you do not close escrow before it expires, then obviously your lender will have to pull it again. So that might have an impact on your credit score. Now, keep in mind that within the 45 window, any mortgage inquiry will count as one for the purpose of in terms of impacting your credit score. So within a 45-day window, mortgage inquiries count as one. Meaning you could apply for a pre-approval with me. Tomorrow, go to apply with your bank or a local credit union. All mortgage inquiries within that 45 window just counted as one. So it won't have any negative impact on your credit score. All right, so that's step two. Any questions? I know, yes, Marquetta, I know, I totally agree with you. Again, it depends on the realtor or the real estate agent and the market that we're in. A couple of years ago, when we're in the seller's market, um, what's common practice for real estate agents to say, if you're not to only work with pre-approved buyers. They have no time to wait for the buyers, their clients to get a pre-approval letter. As in a seller's market houses will not stay on the market for long. Yeah, a lot of people during over the last couple of years, financially, it's been a struggle for a lot of people. So and that's the down payment assistance programs been very popular. So Jenny, would my credit union have down payment assistance programs and funds? Um, for down payment assistance programs, the lenders have to be approved, or the loan officers themselves have to be approved by CalHalfa in order to offer those programs. I don't think any credit unions are approved with CalHalfa. I could be wrong. Now, with that being said, they might have their own internal down payment assistance program for um, for myself. Like I said, I'm a broker, so I work with a lot of different lenders. So I have a lot of lenders that are pre-approved with CalHalfa to offer their program, and then they also have their own internal program. Um, so so that's um, so that's one of the advantages working for or working with a mortgage broker. Um, Now, like if you talk about like Wells Fargo, the big banks, most likely they will not. Um, so that might not. If you're looking for down payment assistance program, that might your local bank might or CU might not be a good option. Um, but if you go onto the CalHalfa website, they will have a list of all the pre-approval of all a list of their loan officers that are approved with them to offer the program. So again, the loan officers themselves have to be either approved by CalHalfa or the lenders have to be approved. And Trick, how does it work if you place a couple and 1% of a lower score? Um, so and Trick, hopefully I pronounced the name correctly. That's a good question. So 99.99% of the time, the lenders will use the lower of what we call the middle score. So each individual have three credit scores: TransUnion, Experian, and Equifax. So lenders will use the lower of the middle score, the two available middle scores, when there's more than one applicant. Now, Wells Fargo, one of my previous employees, and I'm not aware of any other banks that this, but with Wells Fargo, they would use the highest income earners credit score to qualify. So that might benefit you or not benefit someone in a situation where the highest income earners credit score is higher or the highest of the two. But in general, the general practice is that um, lenders will use the lower of the two middle credit scores to determine the interest rate in the loan program that they qualify for. So I'm going to put the link here again. Um, any other questions for me at this point before I move on to the next section? Great questions. All right, okay, so let's go to the next section. All right, so make an offer. Now that you know what your budget looks like, talk to a lender, got a pre-approval. The next step is to tour properties with your agent, and hopefully you see one that you like and be ready to make an offer. Right? So your agent, myself, or any person that you work with, will negotiate the terms of your offer, right? Price, contingencies, um, such as how long it will take for you or for your bank to approve your loan, um, how long will it take for your bank to get your appraisal in, how long will it take you to do any inspections, and most importantly, how long will it take your bank to close escrow. Typically, right now it's about 24 to 30 days. A couple of years ago, when we were in the seller's market, the sellers were looking for a 10 to 14-day close of escrows, which is possible, but not every bank can do that. But now the market has slowed down, so it's not as important um, that you close escrow within 2 weeks of going to contract. Mm. Typically, it's about 24 to 30 days. Um, your offer, the seller can either accept, decline, or counter. Now, from the time the offer is submitted, contractually speaking, the sellers have 3 days, 3 calendar days, not business days, but calendar days to get back to you. Right? Now, some um, will review offers as they come in. Some would set a offer date, offer deadline. Right? Some will set an offer deadline with an option to review offers as they come in, what we call preemptive offer, right? So that means is let's say, hey, this house that you like, the offer deadline is let's say March 20th, right? So what that means is that the sellers will not accept or review any offers until that date. However, they can also include a language that says sellers reserve the right to review and accept any preemptive offers, right? So in order for the sellers to do that, what they're trying to say is that, hey, if you're giving us 10, 15, 20% over asking, guess what? We're gonna review your offer before the offer deadline. But if you're gonna give us a below asking, guess what? Don't even bother, wait till the offer deadline. Right? So again, the seller can either accept, decline, or counter your offer, and they have to do it in three days of the offer being submitted. Obviously, we want your offer to be accepted. Now, once the offer is accepted, um, once the offer is accepted, then the clock starts ticking. Your EMD, it will be due within 1 to 3 days. You can either wire the money to the title company using their instructions, or you can drop off a cashier's check to them. Okay. Again, it's 3% of the purchase price, unless the seller wants something more, um, or if you're using a down payment assistance program, 3% might not be feasible at that time. And if that's the case, then your agent would need to negotiate with the seller or the listing agent to see how much they would accept. All right, so once the offer is accepted, then the next step in the process is to work with your lender. You need to provide any documents to your lender to submit your file for what we call underwriting or underwritten or conditional loan approval, right? So if you remember at the pre-approval stage, your loan officer, your lender will most likely collect your W-2s, bank statements, and pay stubs. More often than not, that's enough for the pre-approval. However, For the actual a loan approval, conditional loan approval, they would need more than that. And they might need approval of rent payment for the most recent 12 months. They might need you to provide some explanations for name variations on your credit report or some recent credit inquiries, right? Whatever the situation calls for. Um, so once everything is provided to your lender, your loan officer, then your loan officer will send you what we call the initial disclosure package. It's very cookie cutter. Everyone will get the same package. The only difference would be obviously the name of the borrowers and their personal information, such as date of birth, social security number, and addresses and things like that. But you want to pay attention to the loan estimate or the LE. And again, I will go over to give you guys an example of what that is. Most importantly, you want to order your appraisal ASAP. Right now, the initial disclosures will have what we call an intent to proceed. Right, lenders cannot move forward until that intent to proceed document is signed. And that's all what that is. This intent to proceed with the lender doesn't mean you have to, right? Just your intention. Again, until your lender receives the signed intent to proceed form, they cannot order your appraisal. Right. So it's important that you sign the initial disclosures and remit your upfront fee for the appraisal to the lender so he or she can order your appraisal. The appraisers are third parties not affiliated with the lender. The only way they will go out to do the physical inspection if they see a payment on hand. Now, if they do not see a payment on hand or being collected by the lender, they will not go to do the inspection. So you want to order this as soon as possible. And this normally takes the longest during the loan process. And it could take anywhere from 2 to 4 weeks. Now, imagine that your close of escrow is 24 days and it takes 2 weeks for the appraiser to come in from the time it's ordered to come in, right? And then from the time the lender receives it, they have to send it into the underwriting for review and approval, right? And that process takes time. So like I said earlier, it's very important that you get this done as soon as possible. Right. So this is a sample of a loan estimate. Again, Nexon Mortgage is the employer I currently work with, and I cross out my applicant's name to protect their identity. This is for a VA loan in Vacaville. Their base purchase price and the loan amount was $515. Again, we did 0% down. The reason you're seeing a higher loan amount of $537 is because of the VA funding fee. So those that are VAs here, if you know what that is, great. If not, we can discuss that during our consultation. I'm going to post the link here one more time. So, so this is the first page of your loan estimate. You see the loan amount, interest rate, your monthly principal and interest payment, right? And then down at the bottom, you see your property taxes or home insurance, the estimated property taxes, home insurance. And then to the right of that, you will see, is it in escrow? Yes, yes. And for VA loans or any government loans, it is required that you prepay your taxes and home insurance on a monthly basis, beginning with your first month's rent payment, not rent, your mortgage payment. Okay, so that's why for on this example, you see yes in escrow, right? So, and then here, right above that, you see your estimated total monthly payment, which again includes your principal, interest, taxes, and insurance. It doesn't include your any homeowners association dues because that's not to the bank, that's to the management company. And then you get an estimated closing cost and your estimated cash to close. So that's on the first page. On the second page, I have a breakdown line by line. What your estimated closing costs would look like. So the first two boxes are the lender component. Right? Remember the four components that I discussed earlier. So your first two boxes will be the lender. So origination. So your lender would charge, in this case, my lender charged an underwriting fee of $995, right? And that's all we charge. However, we do contract with some third parties to offer services that is vital to the process. One of them is the appraisal fee. In this case, we estimated the appraisal fee to be $750, the credit report fee to be $100, and then such and such. Section C and Section H are your title fees. Again, this is pre-selected by the title company, by the seller, right? Section E is the city and county. You have to pay a recording fee, and then you also have to pay a transfer tax. Right? Section F is the prepaid item, the fourth component. Section G also is the prepaid component as well, and cover that in more detail later on. So Section F is your prepays, which includes the first years of homeowners insurance premiums that have to be prepaid for at close of escrow, your first year. And then after that, it's up to you, between you and your insurance company, how often you want to pay it. Now, for those that have an impound account set up, which is Section G, then it will be prepaid on a monthly basis. Another item is what we call interest on a per diem basis. In this case, it's $95.45 for 22 days. That comes to the $2,100. So how that come about is, let's say you're closing escrow on the 15th of March. Well, guess what? You have to prepay the interest on your loan from the 15th to the end of March. So 31 days, so that's 16, 17 days or so. So you have to prepay the interest from the day of close of escrow to the end of that same month. Right? And then for those that set up an impound account or it's mandatory, you also have to prepay your homeowners insurance about 2 to 3 months in advance. And then also your property taxes. Could be anywhere from 2 months to 7 months, 9 months, depending on your close of escrow date. What this is that in order for you to set up this impound account or escrow account, you have to prepay a deposit. So it's similar to if you go to walk into your local bank or local credit union to open a new checking or savings account, they will ask you for a minimum opening deposit. Could be $25, could be $50, could be $100. So same concept is that you could look at this as a savings account under your name held with the lender to prepay your taxes and insurance. So there's no fee to open it. There's no fee to maintain it, but you do have to pay a deposit in advance. For homeowners insurance, it's usually about 2 to 3 months. For property taxes, it's determined by when the close of escrow date is, or the month is, or actually, no, more technically speaking, when your first payment will be. So give an example. If your close of escrow is in March, there's no payment in April. So your first payment will be due on May 1st. Again, if you close escrow anytime in March, there's no payment in April. Your first payment will be due on May 1st. And beginning with that payment and every month thereafter, for those that have an impound or escrow account, Section G, you have to prepay your taxes and insurance. So once those bills are due, then the lender will disperse the funds from this company to pay your county, your property tax or your homeowners insurance. Right. So that's Section 2, and then down at page 2 of the loan estimate. Then down at the bottom, you have your total estimated cash at close. Will reflect any closing costs. Credits in this case, I was able to negotiate a $10,000 credit from the seller to help my clients with some of the closing costs. Right. So the loan estimate is about 5 pages, but the remaining pages are information only. So you want to focus on the first 2 pages. Okay, conditional loan approval. So there's 4 types of approvals. So we could start at the most basics, which is the pre-qual. So that's based on verbal information or unverified information that you provided to your loan officer. And then there's a pre-approval where your loan officer will verify your income, credit, and assets, hopefully. And then the third type of approval is what we call conditional loan approval or underwritten approval. What that means is that your loan officer will package your file and send it to underwriting. An underwriter will review your file, make sure that you meet credit, income, and asset requirements. Right? If you do, then he or she will send a what we call a conditional list for final loan approval, which is the last type of approval. So some of the conditions could include your homeowners insurance policy. Right? So you need to shop around for your homeowners insurance policy. And the best place to start is whoever has your auto loan or auto insurance policy. That way you hopefully can get a bundle discount. Right? You will need to wait for your appraisal report to come in. The appraisal report needs to the price value needs to support the purchase price. So it cannot be lower. It needs to be the same or higher than the purchase price. If it's less than what you pay for it, then that will become an issue. At that point, your agent, such as myself, will have to renegotiate with the seller, with the listing agent, to either have them reduce the purchase price to match that of the appraised value, or somehow compromise, or split it 50-50, right? Unless that gap, meaning the difference between the price value and the purchase price, is made up, we cannot move forward with the loan. Right? So if you do not have an appraisal contingency, or any contingencies still in place when the appraised value comes in, and if you back out of the contract, then guess what? Your earnest money deposit will be at risk. And speaking of which, your underwriter will also ask you for evidence of your earnest money deposit clearing your account. Could be a 30-day bank transaction history, which you just need to show that it went out of your account, right? And so forth and so forth. Whatever underwriting needs in order to issue a final loan approval. You will need to work with your loan officer to provide and collect all these documents. Once the loan officer feels that he or she have everything needed for final approval, then we submit the file back into underwriting for what we call final loan approval. Right. Contingency, and this is important, right? It is for yours, the buyer's protection, the buyer's and also the lender's protection. Therefore, it's detrimental to the sellers. A couple of years ago, when we were in the seller's market, the offers that people were putting in were without any contingencies, right? Back then, the sellers were looking for the highest, the best, and the cleanest offer. The cleanest meaning no contingencies. Again, those are detrimental to the sellers. So there are three types. Loan. Can you qualify for a loan? Your loan officer pre-approved you, but you need to make sure you can qualify for the actual conditional loan approval that we went over previously, right? And that's where underwriting comes in. Appraisal. We discussed that. You want to make sure that the appraised value comes in, so you want to have an appraisal contingency to protect yourself against a possible appraisal issue. You want to have an inspection contingency. More often than not, the sellers would have already provided or done these inspections, right? But if not, you definitely want to do them and pay for them. A lot of home buyers, a lot of sellers right now would do the home in the past, but for a reason they would not do the roof or do the sewer lateral, right? So you want to make sure that you have all these inspections covered. Right now, let's say you remove all these contingencies and the appraisal comes in less, right? For some reason, you decided to remove the appraisal contingency before the appraisal comes in. Well, guess what? Now you don't have any protection, right? If the seller is not willing to renegotiate the purchase price and you decide to back out of it, your earnest money deposit will be at risk. Or once you remove all the contingencies and there's no appraisal issue, but for a reason you decided not to move forward with the loan, or you got got terminated from your job or got laid off, which happened quite frequently or over the last couple of years. It's not your fault, but at that point you no longer qualify for a loan, and since you do not have any contingencies in place, the sellers do have the right to keep your earnest money deposit. So that's why you want to wait to the very last second in order to remove your contingencies. All right, I know we covered a lot. So any questions for me? Anything we discussed the previous sections? You guys still with me? Any questions? Give me a thumbs up or emoji if you guys are okay, still with me. All right, so I got a couple thumbs up. Appreciate it. All right, thanks, Alvin. Appreciate it. All right, so it doesn't seem like we have any questions, so we're gonna move forward with the final section here. So step 4, preparing to close. So a week or 2 before your scheduled close of escrow date, you should have all of these done, right? Your loan should be what we call CTC, or clear to close, or final loan approval. What that means is all of your loan conditions have been satisfied. The underwriter likes your loan. All the necessary documents needed to document that you qualify. So then at that point, the underwriter will give us a CTC, or final loan approval. You want to do a final inspection of the property, right? Especially if the property was occupied either by the sellers or by a tenant or tenants. You want to make sure that the house is in the relatively same condition as it was when you went into contract, right? Contractually speaking, on any occupied properties, the occupants have to move out by no later than 5 days before close of escrow to give you the time to conduct your final inspection, right? You want to make sure that, hey, when they move, they didn't accidentally knock a hole in the wall or scratch the wall or scratch the floor, right? You want to make sure the appliances are working, the garbage disposal is working, and things like that. Now, if there are stuff that you find that wasn't there when you went in the contract, well, guess what? Your agent, like myself, will have to point that out and with the listing agent say, this wasn't here before. We will not close escrow until this is fixed, or the sellers have to give us some closing cost credit, right? You find a property to be in satisfaction or a satisfactory condition, then you will sign off on the inspection. Right. You want to review your initial CD, or closing disclosure. We went over the loan estimate earlier. So once your loan is close to being done, the lender will send you the initial CD, or closing disclosure, for review. Just like the LE, the loan estimate, or the LE, we have a breakdown of your closing costs. However, the difference between the two is that here on the CD, the numbers have been verified with all the different third parties. Whereas on the loan estimate, just your loan officer's estimate of what your closing costs will be. Here, the lender have gotten the fees from the title company and have populated into the system to generate this document. However, this doesn't have to be 100% correct. The main purpose of this document is to start the clock ticking. By law, buyers have 3 business days, including Saturdays, but excluding Sundays and federal holidays, to sign documents. So it's a 3 business day cooling off period from the time they receive the initial CD to the time they can sign loan documents. So that's all this does, is just to trigger the the clock. The final disclosure, the final closing disclosure CD, will be included in your loan documents, which you'll be signing at the title company. The title company will send you one for review if your loan office haven't, or the lender haven't. Your title company will send a final copy of it for you to review. Right? So you will sign loan docs and remit payment. You could do it on site at the title company, or have them send what we call mobile notary to your home, or your in the location of your choosing, for an extra fee, usually about $100 to $150. Right? So this should happen within a week or 2 weeks from when your schedule close escrow date is. Right? All right. So at closing, so once you sign the loan documents and remit payment, what will happen is the title company will send the deed of trust, which is included in the final documents, to the county recorder's office to record the change of ownership. This only happens during business days, which is Monday to Friday. And it's done in the afternoon between the hours of 1 to 5, right? So once the transfer of ownership has been recorded, then the house is officially yours. The title company will receive a notification, and then they will inform all parties, the listing agent, the sellers, the buyer's agent, the lender, right? So they will inform all parties. Then your lender and your real estate agent will reach out to you and say, hey, congrats, the house is yours. And also schedule an appointment for you to pick up the keys to your new home. Right? You could either pick them up on that same day, or pick them up at a different day. Your agent will have the keys and will either meet you at your new home, turn over the new keys, or at another location of your choosing. Right? And then lastly, pop open your champagne. It's time to celebrate. You've gone through a lot. So this is where the fun starts. But this is where you actually get to realize your dream of a home ownership. All right, so that's a quick summary. All right, steps: plan your money, talk to the lender for the pre-approval, make an offer, prepare the close, and then the actual closing. All right. So the next steps in the process of during the consultation, myself or whoever your loan officer will be will try to get a good understanding of your situation, your challenges, your roadblocks, your emotional feelings, and then they will offer solutions and strategies to help you get on the path of homeownership. Right? If you like what you hear, or if there's a way to make it work, then we'll start the pre-approval process. Again, online takes about 20 to 30 minutes. Then you want to work with your agent at that time to review listings and also take tours of the properties. You could do them during open house, or you could schedule a private showing. All right. All right, this is the final Q&A. Any questions? I'm gonna post the link here for my kind of those that wants to schedule an appointment, a 30-minute complimentary consultation. Again, during the consultation, we'll get a better understanding of the situation. If it makes sense for me to represent you as your loan officer, as well as your real estate agent, that will let you know. If not, then I'll refer you to either a loan officer that can better service you, or a real estate agent that can better service you. All right. Any questions for me? Any final thoughts, comments? Any questions? Anything I didn't cover that you guys want to me to answer? Let me see here. Okay, let me send to everyone. I'm gonna have to send it to Jenny. Okay, so yeah, Frank, I am in Vacaville. I service Contra Costa County and Solano County mainly. I lived in Richmond for 8 years, from 2008 to 2015, and then moved out here to Vacaville in 2015. How about you, Frank? Where are you? Where are you located? That's all the question for me? All right, so last call for questions. Okay, so you're okay. Welcome. You're welcome, Paris. Glad you find it informational, find it valuable. Thank you, Lula. Thanks, Regina. I will look forward to talking to you. Just make sure you book an appointment. I'll post the link here. For those that are looking to book an appointment, if there are times that you want that are not available, such as weekends or after hours, simply just text me. I'll make sure I'll open up those times or be available for you. I think on my calendar it just shows Monday to Friday during business hours. Yeah, so Frank, I will. I know there was some other a person that requested a copy of the webinar and also a copy of the presentation. So I will work on getting that out to people that requested. I just need to find out how to do it. I'm not that technology advanced in terms of technology, so but I'll make sure to get that out to you and some of the other participants. So I'm just making a note for presentation and also recording a webinar. Yes, I will, Emily, I will. Is it true, Trinetta? Appreciate your compliment. All right, so for Frank, I'm gonna type copy this right here. You also get one after the webinar through the automated text system. So, but I have it here. Right, so I'm just going to hang up for a couple minutes. For those that have any questions, be able to throw them out there. And now looking forward to talking to you guys. So Frank, you see the link? All right, perfect. Thank you. All right, so I guess that's it. Appreciate it. Appreciate all of you guys for showing up. I'll talk to you guys later. Thank you. Bye.